Welcome to the Maryland Mortgage Rate Weekly Mortgage Market Update for the week of June 16, 2014. Hello, I'm John Thomas with Primary Residential Mortgage, here to give you an update. Well, the last 2 weeks has not been bond-friendly. Mortgage bonds have been selling off and interest rates have been moving slightly higher. But last week we ended with a nice level there, and we're looking for rates to move lower. If you take a look at the bond chart on the screen, you can see the arrow down is the short-term trend is for mortgage bonds to sell off, interest rates to move higher. But then last week, you can see that level of support. We were able to hammer out a level of support, and the technical trading symbols right there from Thursday and Friday show that the bond could move higher, it could jump higher, it could rebound off this low. With that in mind, we're going to recommend floating your Maryland mortgage rate to start the week to see if the technicals can hold, because a bounce higher in the mortgage bond would mean mortgage rates would move lower. So we do recommend floating your Maryland mortgage rate to start the week. Now, what helped us hammer out this bottom last week was two disappointing economic reports. The first one was the retail sales for May 2013. Came in at 0.3, which was lower than the expectation of 0.7. And this was the lowest retail sales reading since January of this year. Now, retail sales make up 1/3 of all consumer spending, and it's the main driver behind economic activity in the United States. So, a disappointing retail sales is not good news for the economy. So, bad news for the economy is good news for mortgage bonds. Pulls money out of stocks into the bond market. So, in order for the economic recovery, we need strong retail sales. We'll have to keep a lookout for that. And then the second disappointing report that came out on Friday was the consumer sentiment. Came out worse than expected, 81.2 versus 81.9, which shows consumers aren't feeling as good about the economy as we originally thought. And we also actually saw a third report that helped mortgage bonds, which was a good report. It was on inflation. It was the PPI, Producer Price Index, for May. It actually dropped 0.2%, so it came out negative 0.2 versus an increase of 0.2% was being predicted. So we've seen inflation heating up at the beginning of this year, which means it's been increasing, and that's bad news for bonds. So getting another report that shows inflation actually moved lower, that's good news for mortgage bonds. That helped stabilize and helped us look for a rally coming into this week. Thursday, we saw the release of weekly initial jobless claims. Now, I did tick up to 317,000 claims for the week. Claims have been inching up lately from the lows not seen since 2007. So the labor market's still cloudy. We did finally recover all the jobs lost in the Great Recession, but the problem is there's still 3.6 million fewer high-paying jobs in the manufacturing, construction, and government sectors that we have not gotten back since the Great Recession. So we did get the jobs back, but they're not the high-paying jobs we need for a sustained economic recovery. Now, in housing news, Realty Track reported there were 5% drop in all types of foreclosures from April 2014 to May 2014, And there was also a 26% drop in foreclosures from May 2013 to May 2014. So that's great news on the housing front. We still have the housing market recovering, doing very well. Now, in the local news, the next free first-time homebuyer seminar is Saturday, June 28th. That's in Towson, Maryland, at the Baltimore Sheraton North Hotel. So it's from 10 a.m. to noon. If you'd like to register for that event, give us a call in the office, 410-412-3319, or online, www.marylandhomebuyerseminars.com. Look forward to seeing you guys next week.